following is not trading advice. Everything I say is my opinion. I am not responsible for any losses you may take, only the profits.
What is up, Octo Nation? It's Charlie, your host for today. We got a different video today. I'm gonna go over, should I buy SPACs, warrants, commons, or unit shares? The pros and cons, the differences, and how to play them, how I play them, all right? These aren't standardized definitions whatsoever. These are my interpretations of how I just kind of roll, my interpretations of it. Hopefully this helps some people out. I've been getting a lot of questions about these type of things. So if you're looking for stock plays and all that, I talked about that last night, check out that video, but you might learn something here. I'm gonna look at some stocks anyway and kind of go over how I look at them at the end of his year and see why I come in for units or why I come in for the warrants. So might find something there, even if you're vetting this, all right? So common shares. These are normal shares, normal stock shares, basically. The cons of these, none. That's kind of how I look at them. One of the safest investments on the planet. I'd honestly almost rather have my money here than in any FDIC insured, fake insured bank, all right? Pros, there is a floor around $10.30, okay? It adjusts because of inflation and interest, not inflation, but inflation on the interest in the account, okay? So just plan on there being maybe like a $10.30 about floor. What does that mean? Say this company rides for 2 years, they're looking for another company to buy, right? The SPAC company is looking for another company to buy. In 2 years, they still just can't find anyone that wants to sign with them. What happens? Does the stock go to zero? No, it might, but guess what? At the end of the agreed term, like usually 2 years or 18 months, 24 months, 18 months, you're still left with a $10.30 floor. So if you bought it $10.30, after 2 years they still don't find anyone, guess what? You still end up getting your money back. So worst case scenario, you can maybe break even. Sometimes you could even, lose 5% if you're getting in early, okay? That's why another reason I talk about getting in early, right? They're available for trade on most trading platforms. I haven't, most of the ones out there are gonna have it, pretty much all of them. These are a lot more stable to trade. They're not as insanely volatile as, the warrants and all that. They're a little bit easier to find channels. There's more volume in these, so it's easier to day trade because you're gonna find these channels like we talked about yesterday's video, okay? Big on finding the channels, writing it. You can find those and day trade it, all right? Buy, sell, buy, sell. When do you buy these? This is usually the first thing that you want to buy, in my eyes. These usually come out after units, okay? But these are like the more stable where I'd be more comfortable planning a lot more of my percent allocated to a certain stock, okay? I'd put usually about 80% is what I go for. 80% into commons, maybe just 20% into warrants, all right? These ones are safer because that floor. So even and they could have a pending LOI, pending contract, and it just goes south and then the company just goes under whatever, you're still protected at that floor. That's why I'd rather keep, most of my money in here and just forget about it. It's good. If you want to park your cash in one of the best savings account in the universe, okay, that's another benefit when you get these. And this, of course, is all after you do your due diligence and you like the team, you think you like the category going after. There's some categories I won't touch right now, like restaurant-y stuff, or, I'll stop there. Warrants, a common share for less money later on. With warrants, basically what can happen is the old school way of looking at it is if you believe in a company in X amount of months or years is end up going to be way, way, way higher, long-term investing, right? You can get these warrants and end up buying that said share at a super lower price, okay? Now, there's risks involved, okay? Some of the cons are they're highly volatile, okay? These things can go up 200% and then in 3 minutes later down 110%, like that. I mean, it's absolutely crazy. So they can be worthless if no business is ever acquired. So it's the opposite of the common shares, all right? If the SPAC does not end up finding a company and they go out of business or whatever happens, these can go to zero and your money is gone, okay? These are not available on some trading platforms like RobinHood, WeBull, etc. Some of the pros, they're highly volatile. It's a pro and a con, okay? Highly volatile. If you're there to watch, you got to watch these like a hawk. It's the problem, okay? And if you don't, you can lose big. You can gain big, but you can also lose real big. High risk, okay? They're bigger and faster money with these, okay? You can wake up in the morning to a 200% swing, which is great if you catch it. But if you don't catch it and then bad news comes out, it can go back down and kerplut, okay? When do you want to get these? If you want to be risky and swing trade, all right? That's why I said I only do about 20% in these. And you'll see in my other videos that I'm buying to sell, I'm buying to sell, I'm buying to sell, okay? Follow these up, make sure your stops are close, follow it up with your stop sells to protect yourself from these downward swings on these, okay? Lock in those profits. When you're totally long on the letter of intended potential company that they're going after, okay? If you're totally long, if you think that company is actually going to be the next Tesla or whatever you think, and you do want to hold it, you see that thing going to $50 someday or something, you might want to hold it and then do wait until that thing goes to 20 or 30 or $50, and then what you can do is you have to call your broker up and you have to you call it redeeming your warrants, okay? And then what you're doing is you're able to get the warrants at a certain price, okay? And that is called a strike price. And that is different per SPAC, but it's usually around like $11.50. All right, a Crescent Term. This is just some terminology with warrants. Some of these started coming out with Crescent Terms. These are potentially lowering of a strike price if the pipe is extra monies coming in, possibly diluting shares at a later date than agreed upon and said in the original SEC filings, okay? So basically, if they say at the beginning, hey, there's gonna be 10 million shares and that we've got 500 million to play with, then they find a big company that's like, dude, we need way more than 500 million to ball with you, man. They're like, okay, yeah, let's get some more. They're gonna have to find more, and usually find it through pipe, which is just other, side big investors that'll come in. But sometimes there's like share dilution and other things like that. But essentially what it means is they're helping you out. So if something's got a Crescent Term, that's good. So what they say is, usually they're about like 10.50 or 11.50 for a strike price, 11.50 usually. If they have a Crescent Terms, I've seen them around like 9 something, right? Like 9.25. So if you're long on the company, they have a Crescent Term of like 9.25, that's great, because that means you can buy that common share at the Crescent price. When you go to redeem your warrant, you can get it at that Crescent price instead of the 11.50. You can get it at like 9.25 plus the cost of the warrant that you paid there. Okay, the units. These are my least favorite. You get one common share. A unit is one common share and usually a percent of a warrant. Usually it's like a third, a quarter, a half of a warrant. All right, so you when you buy these, if it comes with a quarter of warrant, you want to buy it in sets of 4, right? So that way, if it ever comes down to you splitting them, you don't want to end up with a percent of a warrant, because they never give it to you. They'll never bump it up and round it up or round it down or anything. You just get 0. So if you have a quarter of a percent, like 10 and a quarter warrants, they're only going to give you 10. Okay, so make sure you buy multiples of whatever the warrant is at. The cons. There's a possible 6-week hand tying, okay? When you go to pull these apart and you say, hey, broker, I want my common shares and the warrants split, okay? So I got some of each. They say, okay, give us $50 to $300, okay? And in about 6 weeks, we'll complete the split. But guess what? In that 6-week time period, you can't do anything, okay? So if something hits the fan and the thing is totally kaput, you can't go sell and protect yourself, you're basically screwed. Okay, in that 6 weeks you can't buy, you can't sell them. So I don't like that, because you never know what's going to happen, especially nowadays. Like, you just have no idea what's going to happen to that company or the stock market or whatever, you know. So maybe after the big Hulk smash that's probably coming here whenever, the next 3 months into the year, I don't know. Maybe after that, you know, it'd be a little bit safer to get into these. But right now, I don't want to be having any money tied up that I can't move if I can't move it. All right. Now, what's good about these? You can get in early. Usually the units will come out before the commons and the warrants do, okay? So they'll come out like 2 months before the regular shares come out. So some people, you can get in early. You can usually get them at a discount. So sometimes it's less money to buy these than buying the others separately. And sometimes it's after the commons and the warrants come out, because sometimes commons and warrants finally come out. They actually go down because it could be bad news or something. And then they go up, but the units then stay low. So sometimes you can actually get the units at a killer deal, right? So if it's like a killer deal, like 20% off, maybe I'd think about getting the units, maybe 20% off or something, because you're already ahead. But it's risky though, because you got to wait. But you know, look at that, because sometimes the units are way less expensive. All right. All right. Let's take a look at when I have done some of these. Okay. IPOC and IPOB, International and United States versions of one another. This is one of these. It's gonna be one of these big FOMO, fear of missing out, and stocks here once they finally pop. Okay, look up the people that have done these. I haven't done a video on these yet, but the guy who is running this, you'll start noticing the companies he's messed with. But look into them, all right. And you'll see why I actually bought the units. With this guy, it's like, yes, just take the money, because these, who knows, man? I mean, something could leak on these with how big this guy is and how big this SPAC is, and these could actually pop way before the regular shares came out. And that was my theory on it. So I got these. I no longer have these now because the regular shares and the warrants are out. So I had to call my broker and have them split up. They're finally just ended up getting split up, I think Thursday or something last week. So right now I don't have the units anymore. I have the regular shares and the warrants, but I did buy the IPOC and the IPOB. All right. Since we're familiar, let's just look at SPAQ, SPAC, Spartans. All right. You can see on here buying and selling and buying and selling. Okay. I'm quick with these. I don't want to get in these and hold unless we've got a totally 100% offer in. You know, I'll still buy and hold it. That's kind of what I'm doing now, because I just put a sell order below it. But you can see how volatile these are. Okay, this started just in June, end of June. This was only 87 cents. Okay, gradually started zipping up, right? Got up to $1.95. You would have over doubled your money there, 2.5 times your money already. Okay, I hit my buy-in, it got grabbed, and then look, overnight it doubled. Okay, and now it's even higher than that. So what's the difference between the warrant and the regular stock? The regular stock hasn't even come close to doubling. Okay, the regular stock has only gone up from 10-ish, which is the floor, basically what they come out at, about 10-ish, and it's only gone up to 18.50, which is great, but that's nowhere close to going from 87 cents to $4. Okay, we're talking 4 or 5x in your money on these warrants, where to 4 or 5 extra money on the commons can take a bit. This thing has got to get to $40, where these only got to get to like $4 if you get in at about $1. That's why, I don't know if you've seen that video where I talk about how to make money on the red days. I talk about you got to get in low. Find the companies that you just have a good reasoning for buying in, trust it, and put in a buy, and then ride it up. Okay, be there with that buy to ride it up. All right. So we got the commons, the units. All right, and I guess that's about it. If you have any more questions on this, I just want to get that out there. Hopefully, it helps some people that are looking to get into these. If you have any more questions, put them out in the comments. Any more plays, let me know. I got some more videos that I'm still working on. Are going to probably come out this weekend. But thanks again, guys. You're absolutely killing it with these subscribes, and help me share this. Let's get to 1,000 so we get these live videos out. Like I said, for the last minute stuff, I'm still trying to think of a better way to get some live communication. If something pops, I want to be able to just put it out there, because these videos still take a while to render and put out. So anyways, thanks again, y'all. Have a good day.